the industry is going to see a lot more of that in the next 2 years, specifically in the B2B space. And as new markets regulate, I believe that we're going to see local champions that are going to be taken out by large tier 1 B2Cs. One such transaction is Flutterbet National, and so on and so forth.
This podcast is brought to you by Pragmatic Solutions, the leading iGaming PAM platform with a modular approach, including many benefits like a fast, secure, and scalable API-based platform, integrated with all major third-party products and services. Make sure you head over to Pragmatic Solutions and join our smart thinking.
This podcast is brought to you by Pragmatic Play, a leading game developer providing player favorites to the most successful brands across the industry. With an award-winning multi-product portfolio of slots, live casino, bingo, virtual sports, and more, Pragmatic Play is powering up new possibilities of play through one single API. Visit pragmaticplay.com and discover your favorite every time.
Cool.
All right, brilliant. We give it a go?
Yeah.
All right, Matevz, you're back in the seat here, back in the hot seat for round number 2, almost a year to the day from the last time you were here. How are you doing today, my friend?
Very good, very good. Last year, I think that was like a few weeks after I've been appointed as a CEO of the company.
Absolutely.
So that was a very hectic time.
I can imagine, my friend. And now
I'm a bit more relaxed.
And a bit more relaxed, yeah. And now we are a year into you steering the ship, so to say. You're obviously the chair and the chair of the board and the CEO of Bragg Gaming Group, of course. And we want to kind of follow up on that podcast we did 1 year ago. So 1 year ago, we kind of dug deep into the history of Bragg Gaming. Where are you today, and so on and so forth. And since then, a lot of things has happened, of course. But I just wanted to start off. Bragg has several verticals within the organization. You do a couple of different things.
Correct.
So I just wanted to, for those who are less educated about the company, could you, in a very simple way, describe the business model of Bragg Gaming Group?
Yes. So we supply the tech stack to B2C operators. So imagine you have a B2C operator that has a license, and it's a new company that is venturing into online gaming and online sports betting, and needs a full tech stack, the player account management, needs a product delivery platform, which is our hub, and needs all the content, so a variety of content providers. And then what we also supply is obviously our proprietary and exclusive content. So you have the license, you have the marketing budget, and we deliver the rest. Now, some operators that are already active in, let's say, 3-4 core markets and want to venture in a new market, it's called tier 2 markets for them, and don't have the bandwidth to do it, they would then select a partner like us to deliver a turnkey solution for those two, like tier 2 markets for them. And I guess the third biggest opportunity for us, if we want to call it that way, is delivery of content, aggregation of content, and delivery of content for operators that want to accelerate their content strategy in either a new market or existing market. So they might have existing integrations and they're not able to deliver the integrations fast enough. They would engage with us, and we deliver a large number of content providers in a single contract arrangement, in a single back office arrangement. Very easy to use. We have all the engagement tools that they're happy to use then, and obviously that helps them accelerate their strategy.
Brilliant. So you have a lot of different partners in the industry, crossing both operators and suppliers, and you are kind of a center of gravity of the industry for partners to increase their distribution and take on board more tech stack from third party. So Can we talk about the year in review? So again, you were here 12 months ago. What has happened since then?
So last year, it was all about alignment of shareholders, the board, and the management. We did a lot of, let's call it stabilization of the business. And we focused on rebuilding. So we have seen obviously strong momentum in our core markets. We have grown in our core markets, and we entered some of the new markets as well, obviously. But what my focus was to build a very strong executive leadership team. So we hired in a number of different positions. Started with obviously the CEO, then we hired a new chief HR officer, Simon. He joined from Sportsradar. He was previously a VP at Sportsradar. Then we hired Neil White as a new chief commercial officer, and Garrick Morris as a senior vice president of the Americas. We hired a new CFO, an interim CFO. Obviously, we're in the strategic review process. So for that reason, we hired an interim CFO. Robbie Bressler, his background is Bally's, Games', Jackpot Joy, and Entertain. Neil White and Garrick Morris, they come from DGC and microgaming background. And then as the last C level person, we hired Tommaso Di Chio from Strive Cambi. So we have strengthened the team, despite the fact that we're in the strategic process. We obviously have to run the business, and I think we made a very good progress on that. We also hired lower levels, more operational individuals that are going to lead the initiatives, particularly in the Latin American markets. So Amanda Alexandrini and Sara Mosali, they're going to be working on the initiatives in Brazil and the rest of the LATAM. And we hired some experienced individuals that will run commercial operations from us. So that was my focus in particular, and board's focus as well, is to build a very solid team that is going to be able to take this company whichever direction we are going to take as a result of the strategic review.
My favorite business book is called Good to Great, and it breaks down what makes a great business. And the first principle in Good to Great is get the right people on the bus.
Correct.
Before you decide where the bus is going to drive, get the right people on the bus. And it seems like you've done a great job in really strengthening the team with some big players of the industry to get the right players on the bus, and now then to understand where the company needs to go. So to that end, you called a strategic review, as you mentioned, of the business earlier in March. It was listed in your annual reports when that was released. This was about 6 months ago. Could you explain the background behind your decision to call this strategic review, and what's happened since then?
So we're a NASDAQ listed company. I don't think we have seen the market recognize the opportunity, and we have seen a lot of M&A activity in the industry, vertical integration, and other activity in both B2B and B2C space. And we believe that there's a value that this company has that is relevant to strategics in this industry, and that we can effectively unlock this value through an M&A process. There's a lot going on. Obviously, I can't really talk about any particular opportunities. We have appointed a special committee that is running the process on the board level, and we have appointed an advisor that is talking and managing all these opportunities. I think that the industry is going to see a lot more of that in the next 2 years, specifically in the B2B space. And as new markets regulate, I believe that we're going to see local champions that are going to be taken out by large tier 1 B2Cs. One such transaction is Flutterbet National, and so on and so forth.
Yeah, and yesterday Flutter acquiring also Snaitech, right, for Italy, in a massive 2.4 billion euro deal as well. So you mentioned just this, there's been a lot of consolidation and M&A activity in the sector, and perhaps in the future you see an acceleration of that trend. How much does that play a part to this decision to call the strategic review? Can you perhaps dig a little bit more deeper into the thinking around M&A
like I said,
in general in the industry?
Yeah, like I said a lot. I mean, I think there are opportunities out there that we need to look at that are going to unlock the value of Bragg and deliver the value for our shareholders. Yeah. We want to be a part of those conversations. As a vertically integrated company, and a company that has both the PAM and related tech stack, the content delivery tech stack, the product delivery tech stack, and proprietary and exclusive third-party content, and we have the operational knowledge, through managed services. I think we could be a very attractive target for a number of different B2C operators, but also a number of different land-based B2B companies, as well as online B2B companies, whether that is a sportsbook looking to venture into an iGaming space, or a content provider that wants to acquire an aggregation or a content delivery platform and then optimize the margins in that respect. And so a number of different angles that could be explored and are being explored.
So I took note that in your company reports that the company is steadily growing its revenues quite considerably on a year-to-year basis. You are quite considerably growing your EBITDA, adjusted EBITDA, on a year-to-year basis, and your CAGR is looking really healthy. However, you're still publishing a net loss in the company, I believe around 5 million euro USD in the last year. Can you talk more about the kind of long-term play to turn the company profitable on a net basis?
So we have been intensively investing into our tech stack, into our people over the last 10 years. And what the situation that we're in right now is that we have all the elements in place. We have 2 proprietary studios. We have a very scalable product delivery platform and a very scalable PAM business. So we need to grow the revenue of our proprietary content, and we need to grow revenue of our PAM. These are the most profitable products in our product mix. So to a certain extent, we need to change the product mix. The foundations are there and are extremely well placed to grow the PAM business. We need to scale it. Obviously, we need larger opportunities, operators that are bigger. The same as with aggregation. So the bigger the operator, the bigger the scale, the larger the profit margin. And with proprietary content, as we see growth in the United States and Canada and some of the markets in Europe, like Italy and our core markets where we have PAM, like Croatia, Czech Republic, and Holland, we will see more proprietary content placed and promoted within those operators, and we will see higher share of wallet with those operators. We're going to leverage the fact that we are supplying a fully vertically integrated solution with PAM and aggregation, and maximize the share of wallet for proprietary content, and that is going to deliver higher profits. Another important thing is obviously operational effectiveness, where we have to grow revenue faster than we grow cost. Bragg has seen a lot of change, obviously, over the last 3 years. First, we rolled Oryx into Bragg, then we acquired 2 companies. We've seen lots of integration, lots of different changes at the helm of the company, and as well lower levels. So I think now we're perfectly set to execute the plan that I was just talking about, and increase the profit margin, become cash positive.
Yeah, it certainly seems that you are turning the chapter to some extent now with the new leadership team in place, and you have, to a large extent, replaced the old leadership team with the new, more experienced leadership team.
We have matured, right? This company has matured into a very serious B2B player. We have 30 licenses, or not exactly licenses, but we have been licensed, approved, certified in 30 different regulated markets. We're a NASDAQ listed company. We have 450 plus people, 250 plus clients. The leadership team is extremely experienced, and we have experience from different areas of the business, whether that is land-based content, sports betting, technology, business development. So I think we're extremely well placed for growth in the next 3-year period.
Brilliant. And the kind of reason behind the major changes in the leadership team, is it also to an extent to change strategy, or as you point out, you've had major growth, so the company is just in a different position than it was before, it requires a different type of leadership team, or are you also adjusting your business model because of all these changes?
We're not changing the business model. We are going to be focused on the strategic pillars that have been identified over the course of the last 12 months. And that is proprietary content and exclusive third-party content. We want to change the product mix and unlock the value and increase profitability, obviously. Distribution into regulated markets as markets like Brazil, Peru, some of the markets in iGaming markets in the United States, open, regulate. We want to be there, and we want to be an important B2B supplier to those operators in those markets. Obviously, we're growing in regulated European markets as well. We're one of the most important, if not the most important, B2B supplier in the Dutch market. We have entered a number of different markets over the course of the last 2 years, such as Italy, UK, Portugal, and so on and so forth. So that is the second sort of pillar. The third pillar is the full product suite that we're able to offer to operators, and the cross-sell and upsell opportunities within that space. And like I mentioned before, profitability is going to be a big part of our strategy. Increase profitability and monetization of existing relationships within the industry, where we have the PAM, we have the aggregation, and now we're moving into the content, proprietary content space, and we want to maximize the share of wallet, and to that extent maximize our profits.
Right.
It's pretty simple strategy.
Make more money.
Yeah.
So in last year's episode, we talked a lot about kind of geographical distribution, diversification. We focused a lot on the US market specifically, and the last episode that we did together as the kind of most exciting growth market for Bragg at that point. So I want to switch a little bit focus now to do a little bit of a world tour together and explore the incredible opportunities that the industry is presenting itself with now, with major growth in many different continents and markets within them. So as a starting point, where are the biggest areas of value and growth, would you say, for Bragg, if you look at the global markets opportunities today?
I feel like I'm repeating myself, but I'm going to do it again. So by far the biggest opportunity for us globally is the effective implementation of our strategy related to proprietary and to a certain extent exclusive content. We are going to use PAM relationships, aggregation relationships, and the fact that we are licensed and certified and approved in all of these markets, and like I said, maximize the share of wallet.
But if you zoom into a specific growth opportunity as a market specifically, so last year again we talked about North America, that was kind of the big opportunity.
Yes, and
I take note that in your quarterly reports there's more discussions around Latin America perhaps at the moment, and you mentioned this as well. What's your current biggest focus if you think about geos?
If we think about geos, our biggest focus is US. We are increasing the coverage in the US, so we are launching content with operators in all of these states. I think that we're close to 90% of the market, and we have slightly adapted our deployment model there so that we are, more effective, faster, and that we deliver more value to these operators. I think US is then closely followed by markets like Holland, which is our existing market, and to a certain extent then Canada, Brazil, and other Latin American markets, and then European markets where we have established relationships and we want to slightly adjust our strategy and obviously take relevant market share in those territories. If we talk about geos, we have identified markets in Europe that are likely going to regulate in either short-term, mid-term. These are the markets that are coming out of monopolies like Finland, like France, like Poland. And, I would say we're very well placed to deliver whatever operators are going to need for them to effectively operate in those markets, whether that is a turnkey solution or product delivery or just proprietary content or exclusive third-party content. Diversified offering in that respect, unique offering, local content. We have been focusing a lot on customization and delivering branded custom content, unique content to some of these operators, both in the US and in Canada and in Europe as well.
Brilliant. Let's zoom in on each geographical area one by one and talk about the opportunities and Bragg's place within them. So starting point with the US, as you mentioned. So US was the biggest focus last year. It's the biggest focus now. You have already set up relationship with most of the operators in the US, which by itself is quite impressive because it's difficult to walk through the doors of DraftKings and get them to sign an agreement, I would imagine. Still, US, if I'm not mistaken, the 2023 revenues were representing a quite small piece of Bragg's total revenues.
Correct.
Correct me if I'm wrong, around 10 or 15% or something along those lines.
US was less than that.
Less than that even.
Yes.
So clearly, as you mentioned, that seems to be the opportunity here. You have the relationships with the operators, which seems to be the most difficult part. You have gone through the regulatory challenges that is very difficult in the US.
Correct.
You have done those investments. So the question seems to be, how do you grow that revenue from here? What is needed from Bragg's side to then?
So first thing that we needed was integrations. We have inherited some of the integrations from the Spin acquisition. So Spin was acquired as an aggregator and as a company that had integrations with most of the US and Canadian operators, and had the contracts with most of the US and Canadian operators. That technology stack has been upgraded with a more modern tech stack, the tech stack that allows us to more effectively control the player journey as well, and effectively place and promote that content. We're talking about, a tech stack that supports all sorts of different engagement mechanisms and allows us to offer stuff like free rounds, tournaments, leaderboards. We have recently launched the recommendation engine as well, first in Europe, and then we'll see how that works in United States. Jackpots as well. And, with, like I said, new hires, Neo White and Garrick Morris, they both come from DGC. We know with how successful DGC was in the United States, and we want to replicate that growth. And we have seen, and I think we mentioned that in our Q2 report, we have seen a very rapid increase in wagering. And I think, the opportunity there is, I can't say what numbers we have in our forecast, but we have a very aggressive plan to become a very important content provider in the US.
You have a smile on your face when you think about the future of the US. Let's just leave it at that without going more into detail. So another interesting thing with the US, I think that should not be forgotten, is if we think from industry perspective now, going back a couple of years, the entire industry was looking at the US as the promised land, right? And in recent time, that shift has focused from most of the industry to Latin America and other growth markets and the emerging markets. So we shouldn't forget that the US is still the biggest market in the world, right? And it seems to be so difficult to establish foothold in the US and get those deals over the line, get those contracts over the line, get the regulation over the line. So even though a big part of the industry is looking elsewhere right now, it seems to be, for those who are focused and staying at the forefront in the US, the opportunities are enormous there, right? And do you feel that as well from just looking back a couple of years, that perhaps there are fewer, like less competition in the market now than it used to be a couple of years ago, when perhaps a bigger chunk of the market was trying to establish themselves there? Or how do you view?
I don't feel there's less competition. I think that it's regulation played a big part in creating the environment that we see today. You obviously have companies that have a very clear .com strategy and have moved out of those regulated markets, and there you have companies like us that have a clear regulated market strategy. So we were primarily a German aggregator back in 2017-18. As the regulation as they started discussing the regulation, we started focusing on other European markets where we could effectively deliver our turnkey solutions, and we have successfully mitigated effectively a loss of 75% of our revenue. 65-75% of our revenue, depends on how you look at it. And successfully launched in the Dutch market, and took a large chunk of that market as a turnkey solution provider. We now tend to continue that in the US, that sort of trend in the US. I think we have all the right elements for the US market, all the right elements for the Canadian market as well. I think we're going to see more regulation in the Canadian market. We believe that US is an opportunity, but I would say that there are opportunities elsewhere as well, and we want to diversify as much as possible regionally and product-wise. And would I say that we should forget about Europe? Definitely not. 90+% of our revenue still comes from regulated markets in Europe, and Brazil is growing like crazy. There are going to be opportunities there when regulation hits January 1st. There are going to be local operators that have tech stack that was quickly built in with very small teams, and are not going to be able to sustain the regulatory pressure, and they're going to look for solutions like Bragg that can deliver a tech stack that is going to allow them to sustain the pressure and maintain the growth. And the same is going to be seen in the US market. I think the opportunity that is also out there that we're actively looking at are the lotteries and the lottery space. Most of these lotteries are either transitioning into online one way or the other, and the ones that are online are using, say, legacy tech stacks that need to be modernized. Most of these operators are using tech stacks from the past.
Yeah, you're thinking like state lotteries and stuff like that. That traditionally has been
correct,
bricks and mortar operations that are now transitioning into online.
Yeah, lotteries are going online. I mean, you saw was the recent acquisition of Jackpot.
Yep, Jackpockets.
Yes, Jackpot gets acquired, and there are a couple of other companies out there that are starting to create a space for digital strategies for these lottery operators. And then you have well-established lottery operators in some of the jurisdictions that are trying to improve their ability to cross-sell into casino, to be more effective in how they operate, how they deliver content, how they run promotions, how they manage the player journey. And again, Bragg has all the elements for them to be able to implement those strategies.
Yeah. So if I understand the lottery space correctly, thinking about the US, for example, it seems to be an incredible legacy system they have over there, where each state or many states have their own lotteries, but you cannot buy these state-run lottery tickets online.
Correct.
So instead you have these kind of aggregators like Jackpocket that was acquired by DraftKings, where you basically go to this service, you buy a ticket from them, this company will then go to an actual store and buy an actual ticket or something.
It's a messenger model. It's what they call it, a messenger model. Yeah.
So they basically kind of buy these bricks and mortar tickets and sell them online to some extent. So they enable customers to buy the ticket online. Yeah. But you are saying that rather than having this middleman, you can go to the state lotteries and say, why don't we do a partnership together?
Yeah, I think that in the US it's going to take some time. I think that the US lottery market is not something that we're actively looking at. I think there are other markets where we feel that you have operators that are retail and online, but only effectively online, only sportsbook. And they have some sort of a combination of different systems, and they can't effectively run marketing with whatever they have. And they want to venture into iGaming, and there's no way they can deliver any content. I mean, they can do one integration a year, so that's not going to allow them to compete with tier one operators that can, deliver anything that is out there in the market and can effectively drive growth. So I think that's a much bigger opportunity for us.
Interesting. Talk a little bit more about the opportunities you see in Canada. You mentioned it briefly here. Obviously, Bragg has a office in Toronto. You are listed, dually listed. One of the listings is in Toronto. Why is Toronto and Canada, Ontario, now upcoming regulation in Alberta? How do you see the future of the market in Canada and Bragg's place within it?
We have identified Canada as one of the strategic opportunities, strategic objectives. We want to be on the forefront of these regulatory changes as a B2B supplier. Again, either as a B2B supplier of content, proprietary content to these existing provincial operators, or as a supplier of aggregation to these operators, allowing them to cover the gap that they might have in the content space, or as a turnkey solution provider if you have new operators that are going from brick and mortar venturing from brick and mortar into the interactive, many different scenarios.
You could say it's an extension of the US model, right?
Correct. It's an extension of the European model. In the US, we're very focused on proprietary content, and from that, we are going to potentially deliver certain elements of engagement and content delivery to individual operators. In the US, for example, we don't have the desire to go to venture into the PAM space unless there's going to be a big push for regulation, further iGaming regulation in some of the markets that are currently not on the list, or there's going to be a push in the tribal market. I think Canada is slightly different.
Much more operators active.
Exactly. So Canada is an opportunity for turnkey and PAM, as well as aggregation and proprietary content.
Brilliant. Now moving south into Latin America, exciting markets within that continent, of course. Much of the industry is paying attention to each and every market in LATAM at the moment. How do you see the opportunity there? You talked about Brazil, for example, being a massively potential big market now as it's regulating. Other markets already regulated or on the way to finding itself to regulation. Many markets are expected to be hugely lucrative. What's Bragg's thought about Latin America and the strategies within them?
So Latin America has been, again, historically on the map. We delivered and have been delivering aggregation to tier one, international tier one operators going into those markets. And one such example would be Superbet, and we're an aggregator, content delivery platform for Superbet, and a content supplier to a number of different operators. I mean, Superbet is obviously not the only one that we're delivering aggregation to, but I guess the most well-known. And like I mentioned before, as the regulation hits, some of these operators are going to find themselves in a situation where they will not be effectively able to deliver the solution that the market is going to expect from them. So we're going to see some of them struggling with resources, bandwidth. There's going to be this they're going to find themselves at the crossroads. Do we invest money into a tech stack, or do we invest money into marketing? CPA is going, up, and it's going to go up, and some of them are not going to be able to execute on the growth strategy. And this is where we, again, are perfectly placed to deliver either content delivery solutions, engagement solutions, player journey, player management solution, as well as turnkey solutions for these companies. And you're also going to see international companies going into those markets, and to a certain extent, their tech stack was built for some of the core markets, and they don't have the bandwidth to go into those markets, and they are going to rely on a short-term strategy to launch on third-party platforms. We've seen, Betson, for example, do that. We've seen a number of different operators, and Tain is, as a result of an M&A, but still using our turnkey solution in Holland and so on and so forth. So that is something that we're very much looking forward to deliver in those Latin American markets as well.
Brilliant. And let's move over to Europe. Obviously, very mature markets within the continent. You mentioned earlier that 90% of your revenues are derived within the European market. Are there still any untapped growth opportunities, in your opinion, in the European market? You mentioned a couple of upcoming regulated markets. Is that where you see growth? Do you see growth also in the more mature markets at the same time?
For us, our focus is going to be to increase the share of wallet. Like I mentioned before, where we have PAM relationships, aggregation relationships, we're going to focus on proprietary content placement, effective placement of that product, which is going to result in higher margins for us, higher profitability for us. So very attractive opportunity. And at the same time, we see opportunities. For example, Holland is introducing restrictions and further regulating the market. We are supplying turnkey solution to leading brands in that market, obviously excluding Unibet. And we believe that those brands are going to maintain their position and relatively grow in comparison with what some of the smaller operators are going to see in terms of growth. And then we have opportunities with markets that are going to regulate short midterm. Like I mentioned, Finland is one such opportunity. Poland is the other opportunity, where you have monopoly in casino vertical. Hopefully they regulate that, and they allow other operators to introduce casino as well. Whether that is going to happen and when it's going to happen, yet to be seen. And France is obviously the second biggest market in Europe, and they have no regulation in the casino vertical, and we see that as a large opportunity. There are some markets where we are seeing replacement opportunities, where operators launched on smaller, less recognized local tech stack providers, and are now struggling with those solutions and are trying to migrate away. And content as an opportunity, like I mentioned a few times in this conversation, we want to do a number of different markets that are large in terms of TAM, and we have negligible market share in those markets. Like Italy, for example, we believe that we can create a product that is going to be a good fit for the market and take market share in Italy, for example, and similar markets in Europe.
You mentioned earlier that a couple of years ago, that you had to pivot, that you were early on to understand to pivot from the German markets into perhaps neighboring countries. And today, if I understand things correctly, Netherlands is the biggest revenue driver that
Yes.
you have within the company. 30+% of your revenues is
Slightly
derived-
less now, yeah.
Yeah, from the Netherlands market. Is there a risk that now you don't have that big reliance perhaps as you had for Germany before, but still one market is driving considerable revenue to the business. Is that a risk to the business as you see it?
Of course, it's a risk, but it's also an opportunity. Unless we're going to see radical change in regulation and full ban of iGaming, we believe that we're going to be able to maintain the level of revenues in that market. And like I mentioned before, I believe that the brands that we're supplying the tech stack to are better positioned than some of the smaller brands in the market, and that with the implementation of these changes, they're going to be able to sustain the regulatory pressure and maintain their position. And like we've seen it in the UK, regulation brings like a short-term drop, but then the brands that are well established in the market grow back to where they were before and grow even further. And the market is going to grow again, like I said, unless we're going to see radical changes in regulation, which I believe it's less likely.
Brilliant. To start rounding the conversation of today, Matevz, now looking forward, what are the main objectives, would you say, for Bragg and for yourself in the next 12 months?
If we leave strategic review process aside, let's see what the result of that process is going to be. Maybe in 12 months I'm going to be here talking about a successful M&A transaction.
There we go.
Let's see. But our main goals for next year is obviously change the product mix, more proprietary content, achieve desired scalability. Definitely we want to be scalable in terms of PAM and PAM clients and PAM deployment. Same as with aggregation. Operational leverage, we have to achieve and enhance operational leverage, meaning we have to grow revenues much faster than cost. And we want to continue to work on these strategic objectives that were identified for 2025. What is, I guess, again, the most interesting topic for the shareholders is profitability, and eventually, whatever we have identified as our strategic objectives for 2025 has to result in higher profitability, better cash conversion, and higher shareholder value.
Brilliant, Matevz. We work in the most interesting and fast-paced and dynamic industry in the world, I believe. Just going through the markets here one by one, you can just tell how much opportunity there is out there, and sometimes it's about choosing wisely, of course, and it seems like you have a really interesting strategy ahead there. So thank you once again, Matevz, for coming on board. I'm looking forward to the podcast next year, where instead of coffee and water, maybe we have a glass of champagne here together, who knows? But yeah, thank you so much for today.
Thank you very much.